Sandy Franks, and you're watching Stock Breakthroughs at TaipanFinancialNews.com. My guest today is here to share with you an investment strategy used by the world's wealthiest investors to make extraordinary profits in any market. Rick Pendergraft is the editor and investment director of the ETF Options Trader. You might recognize his name. Rick's insights have been featured in Forbes, USA Today, and the New York Times. His system has already handed out gains like 304% in less than a month, 130% in 16 days, and 67% in 48 hours. Attractive numbers for sure. Let's meet Rick and hear how he makes these incredible returns. Rick, thank you for joining us.
Thanks for having me.
Rick, some investors get nervous when they hear the word options because it sounds like it's risky and a lot of work. Do you find this is the case? Are options really that difficult?
Well, it depends upon the strategy. I mean, there certainly is risk. As with any investment vehicle, there is risk. One of the misconceptions about options is that they have to be tremendously risky, and that's just not the case. It depends upon the strategy you're using. A lot of people hear the statistics about 75–80% of the options expire worthless, but the fact of the matter is a lot of those options are designed to expire worthless. People writing those options hoping they expire worthless and writing maybe credit spreads or something along those lines. So they're really designed to expire worthless. So that's kind of a misconception that people have. As with any investment strategy, you have to know what you're dealing in before you start trading them. So whether it's stocks, options, futures, you really have to know your risk and what you're getting into. So it is different from any other investment vehicle, but you certainly don't want to have your whole portfolio invested in options.
So it's different, but not necessarily any more risky than investing in a stock.
Well, you have to temper your risk, and one of the things that I always recommend to people is not more than 10 to 20% of their overall portfolio be in options. 80% should be in the safe, the stocks, the bonds, so forth, and then 10 to 20% of that can be used for options to get a little bit more aggressive with your trading, and also you have that downside that you can play the downside by buying puts on the on a stock or an ETF that you think is going to be going down.
Now, you suggest that options can be more profitable than other investment strategies. Can you explain why that is?
Well, inherently, there's a lot of leverage in options. For instance, I'll give you an example of a couple of trades that we had in the ETF Options Trader recently, that on November 27th, we recommended puts on the Semiconductor Holders Trust, and the very next day we had calls on the S&P 500, the SPDRs, and a 6% drop in the SMH, the Semiconductor Holders Trust, resulted in a 60% gain in our options. So we had a leverage of 10 there, to a tremendous boost to our portfolio there. On the SPDRs, there was only a 2.6% rise in the SPDRs during our trade, but meanwhile we captured a 90% gain. So the tremendous leverage that options provide gives you that boost for your overall portfolio.
Now, if I'm correct, you focus on a certain class of funds in your system?
Yes, I concentrate on exchange-traded funds. For those that don't know, exchange-traded funds they're very similar to mutual funds, only they trade differently than mutual funds. They're traded on the open market, as opposed to a mutual fund. At the end of the day, the net asset value is calculated, and that's how you arrive at what price you're buying it at, versus the ETF. They trade on the open exchange. You can buy it any time during the day. They're also shortable. Most of them are shortable, not all. Most of them have options on them, so you can buy calls, buy puts on them. So it makes it a lot different. You can't do that with mutual funds, open-ended mutual funds.
Now, it seems as if the number of ETFs over the past couple of years has grown. In fact, Morningstar says there are well over 300 ETFs to choose from. So my question to you, Rick, is how does an investor know which ETF is the right one to be in at the right time?
Well, part of I think I read yesterday, like 357 ETFs out there right now. So a lot of them are too new that the liquidity isn't there, especially in the options. That's one of the things that I have to focus on, is the liquidity issue in the options market. I don't want to be the market. If I make a recommendation to buy a put or a call and there's no open interest there before I get there, I really don't look at that option as a viable place to be, because if I've got subscribers trying to get in and there's open interest at 20 and all of a sudden I've got a couple hundred people trying to get into a trade, I'm going to be the market, and that usually doesn't work out in my favor when that happens. So I really concentrate on about 25 or 30 that really are tradable. You know, the NASDAQ 100 Trust, the cubes, the semiconductors are a big one, the spiders, the diamonds, so forth. These are all, you know, representing the big indices, and liquidity is there to trade them. Then you have the sector funds that are also very tradable.
Now, Rick, is there an ETF that you are currently recommending to your subscribers?
Yeah, actually we have a couple of open positions right now that we have puts on the NASDAQ 100 Trust, the cubes, and we also have puts on the SMH, the Semiconductor Holders Trust. The cubes, the NASDAQ's been struggling to overtake previous resistance, whereas the S&P 500, the spiders, and the diamonds have been moving in this nice upward slope channel, and they seem to be breaking through their resistance, so we're short the cubes, counting on to break down there. And then the Semiconductor Holders Trust, we've got puts on that yet again. I mentioned earlier that the November puts, but now we're in the March puts, and it looks, there's a trend line that's connecting the highs there, and it keeps banging off that and moving lower, so we're playing that yet again.
Now, I have one final question for you. What do you think is the major advantage that options offers investors?
Well, the ability to diversify easily with, you know, by being able to buy puts, buy calls, you know, you can go long, you can go short, but also the amount of money that is required to put into an option versus what it would take to buy or short 100 shares of the stock is so much less. The amount of money it requires to trade the options is so much less than what you would be required to trade the stock.
So less outlay of cash and potentially larger gains.
Absolutely.
Well, that's good information. Thank you for sharing it with us, Rick.
Thank you.
If you'd like more information on Rick's service, the ETF Option Trader, you'll find a report available that explains it all right here at taipanfinancialnews.com. That's it for now, and until next week, here's wishing you a world of profits.